Okay, welcome everyone. Today we'll be looking into audit testing. Specifically, we'll be talking about audit evidence and some other issues related to that. So let's just begin right away and see how far we can go. Okay, so when we talk about audit testing, you cannot test properly without any evidence. You need evidence to test. And that's how auditors do their work. That's very, very important to know. So it's always important to understand that you need some form of evidence to test. So that's why gathering audit evidence is key. And it's through testing that audit evidence that you're able to express a proper opinion. That's also very important to know. And the reason why we need to have audit evidence is that, usually an auditor will express an opinion on the financial statements and will say, looking at the work we did, we think that this report deserves an unqualified opinion or a qualified opinion, whatever it is, right? But it is possible that the contents of that report will be challenged in the future. It's possible, right? And if it's going to be challenged, then the auditor must be able to justify whatever opinion that he gave. So whatever opinion that he's given, it must be backed by some form of evidence. That's why evidence is very, very key. That's why we have the audit work papers to show exactly what was tested. Okay, so this was our sampling technique. So for those who are on audit, they'll realize that there is a lot of documentation when it comes to audits. It's not for fun. It's just to give proper evidence about the procedures the auditor used, the kind of testing they went through. So you would want that so that in case anything is challenged, you can easily back it up with your evidence. Now, what is audit evidence? What is audit evidence? Here, I explain audit evidence as any information used by the auditor to arrive at the opinion on which his report is based. So it's just like any other profession, right? Where you would need some form of evidence to support your claim. Before the doctor gives you a drug, it's based on some evidence. And the evidence will be that you told him that, you are feeling warm, you are doing this, and will base his decision on those comments you told him plus his knowledge to give you the drug. So it's any information that is used by the auditor to arrive at the opinion on which his report is based. It's any information that is used by the auditor to arrive at the opinion on which his report is based. So very, very important. You cannot give an opinion without evidence. Just like when I want that to, sink in. Just when somebody asks you an opinion on something and give them your opinion, they'll ask you, okay, why are you saying what you're saying? You need to back it up with some facts. And this could be information in the accounting records or any other information. And the auditor carries out what we call audit tests, audit test in order to create this evidence. These tests could either be, which we've talked about extensively, internal control testing or substantive testing. Substantive testing is the tests of the financial statements. You can call it test of detail. You can also call it test of transactions and balances. You also have test of control, which is internal control testing. We've explained this very, very extensively in our past lectures. But for your remembrance, tests of controls is simply testing the internal control processes of an organization. So when you are testing the internal controls, basically you are doing two things. You are testing the design of the internal control as well as the operating effectiveness of the internal control. The design, number one, and number two, the operating effectiveness. So when we say design, we mean how the control has been set up. How has the control been set up? Is the design okay? That's one. And number two, operating effectiveness. Is it even working? With design, you are checking for whether the control is even there. With operating effectiveness, you've gone beyond whether the control is just there to actually see if it's actually working. So two different tests that the auditor looks at when it comes to test of controls. It's very, very important. Now, as you go through audit, you see that the concepts intertwine. So you see things over and over as you go through. Then you have test of detail, which I call substantive testing. Those in audit understand that language. It's also called substantive testing, which is also known as the test of transactions and balances. So you are testing transactions or balances. So you can pick the cash balance and test it. You can pick the AP balance and test it. That's what we call test of detail. Very, very important. Then I said here that it is unlikely that the auditor's test will be applied to all the transactions that have been undertaken by the entity during the period under the audit. The audit evidence would typically be drawn from a sample of transactions. It will be drawn from a sample of transactions. It's very, very important. And we've talked about it, how sampling is key when it comes to audits. You cannot test every single thing. So that's where sampling comes in handy when it comes to auditing. Any questions on this slide? Okay. Looks like there are no questions. But in case you have any questions as you are going through and you do not want to speak up, you can always drop it in the chat. Now, we said that we cannot talk about audit testing without talking about audit sampling. So what is audit sampling? Audit sampling is simply a concept where the auditor does not test the entire population of a particular balance or transaction. He does not test the entire population because doing that is not time efficient. So what the auditor does is to test a sample. So here we said that audit sampling is simply the application of audit procedures to less than 100% of the population of transactions and balances. Now, what I need you to be aware of is that all units or all items in the population have a chance of selection. All items in the population have a chance of selection. It's very, very important. Now, as we go through this lecture for today, we'll be talking about analytical procedures. Analytical procedures. So I wouldn't want to touch on that too much here. So as we go on, we'll talk a bit about analytical procedures, which is one of my favorite parts of audit. Now, ISA 500 or ISA 500, if you remember, we've talked about international standards on audit. But ISA 500, which refers to audit evidence. Audit evidence. It sets out, what it does is it sets out the objective of the auditor as it sets out the objective of the auditor. Very, very important. It sets out the objective of the auditor. Now, what is the objective of the auditor? What is the objective of the auditor? We've already talked about the objective of the auditor. The objective of the auditor is he has a lot of objectives, right? But in relation to the testing of the transactions or of the controls in the audit, the objectives of the auditor would be to design the audit procedures, right? And when we say audit procedures, when we say audit procedures, it's nothing strange. It's just a term that is used in auditing. It's just a term used in auditing to refer to the mechanisms or the series of steps or the methods or the processes that an auditor goes through to be able to get the information that is needed for the test and also test the information that he or she gathers as a result. So they are basically steps that are performed by auditors to get the information that is required for the quality of the financials provided by the company. And this helps them to form the opinion. These are procedures. It's just like when you go to those in the medical profession, they talk about procedures. So they also have surgical procedures, These are steps they perform when they are trying to do a surgery. Okay, so they'll do this, they'll start with this, all with the aim of healing or providing a medical solution to the client. In the same way, audit procedures, the end goal is for the auditor to be able to give an opinion. So what are the series of steps that they go through to be able to give the opinion? They will require sufficient and appropriate information. They will need to test that information and all that. So that's what we mean by audit procedures. And as we went through the past question, we highlighted some of those procedures. We saw those procedures pop up a lot in the exam. So I would advise that you go into the exam knowing that. So the objective of the auditor is to design audit procedures. It's also to perform audit procedures. And this helps him to obtain sufficient, appropriate evidence. Now, you always see these two words go hand in hand: sufficient, appropriate. Sufficient, appropriate. Sufficient, appropriate. I don't know if I've talked about it before, but sufficient simply means the quantity, the right quantity of audit evidence. Appropriate means the right quality or relevant. Appropriate, relevant. So the evidence has to be sufficient. That's why sometimes when people go to court, the evidence that they get, they say it's inconclusive, it's insufficient. So evidence has to be both sufficient and appropriate. Both sufficient and appropriate. Very, very important. And like we said, this testing of, or this design and performance of audit procedures is for a goal, right? To be able, for the auditor to be able to form an opinion and to draw reasonable conclusions, which we've talked about extensively here. So it's always necessary to understand that ISA 500 sets out the objective of the auditor, what the auditor is supposed to do, is supposed to do to be able to draw sensible conclusions from the audits that he's engaging in. Any questions on this? Any questions on this? Yes.
Yes, sir. The sufficient and appropriate evidence, is this subjective? What makes an evidence sufficient and what makes it appropriate? Is this subjective, or there is more or less like something to know or a guideline?
Is this subjective as in, can you explain a little bit so that I see what I'm
When I say it's subjective, like it's up to the discretion of the auditor.
Oh, okay, I see what you mean. Yeah, so basically you're asking what are the factors that determine whether evidence is sufficient and appropriate, right?
Yes, sir. Yes, sir.
Kind of, yeah. Yeah, so mainly it's at the discretion of the auditor. Is the auditor, but this discretion is informed discretion. It's not reckless discretion. So it's not like the auditor wakes up and says, I felt like this was good evidence. When we say in discretion, it's at the discretion of the auditor, and you see a lot of things at the discretion of the auditor because there's an underlying assumption that this is informed discretion. And what do I mean by informed discretion? It's informed discretion because it's assumed that the auditor has the necessary skill and competence. It's assumed that the auditor will treat the engagement with that professional care. And it's assumed that the auditor also has an understanding of, of the engagement, and the nature of the business that they are trying to audit. So those things have an influence on what is sufficient and appropriate. At the end of the day, the auditor has an informed discretion on, whether the evidence is sufficient and appropriate, because they are the ones going to implement the audit procedures and do the testing. I hope I answered your question.
Yes, please. Thank you.
So it's informed discretion. It's informed because it's assumed that the auditor has the knowledge, and understanding. So that's what it's based on. It's not like a random person who's just sitting there to do an audit. And so this is an informed person. This is a skilled person who is undertaking the audit. Any other questions? Any other questions? Okay. Let's move on to the next slide. Okay, so still on ISA 500, right? Which talks about audit evidence. We are looking at other requirements of ISA 500. ISA 500. Remember, ISA 500 is talking about audit evidence. So some other requirements are to consider the relevance and reliability of the information to be used as audit evidence. Now you realize that these words, relevance and reliability, they are not being thrown for fun, right? Remember we talked about sufficient and appropriate, right? So if you take relevance, it's dealing with appropriate. If you take reliable, it's dealing with sufficiency, you know. So here we are supposed to consider the relevance and the reliability of the information to be used as audit evidence. That's very, very important. And you can only do that if your audit evidence was sufficient and appropriate. Sufficient and appropriate. Sufficient and appropriate. Very, very important. Now, here I said if information to be used as audit evidence has been prepared using the work of a management expert, then we need to evaluate the competence, capabilities, and objectivity of that expert. There are times where in the work of an auditor, sometimes the auditor relies on an expert or uses the work of an expert, right? So here, in order to be able to assess the quality of that information, we need to evaluate the competence of that person, right? If the auditor himself, selected the evidence, then we know that, the auditor should be someone competent. But here, if we are relying on an expert, we need to evaluate the competence of that expert. So what is the expert saying? Okay, what is the background of the expert? Why should we even listen to him or her? And that gives us an idea of some of these things. It gives us an idea. You also need to understand the expert's work. If you are using the work of an expert, you need to understand the expert's work. You need to understand the expert's work. So somebody might be asking, what is expert? Why is he talking about expert? There are things that the auditor, throughout his audit work, it's not everything that the auditor has expertise in. When it comes to accounting, auditing, the auditor has expertise in. But let's say the auditor is auditing a real estate company, right? And then they stumble on something, a property, or something that they need to perform some testing procedures on. And then they see a valuation report that says the house is worth $5 million. Now, since the auditor's work is not, the auditor is not a valuer, that's not the auditor's business. The auditor just audits. Now, the work of the valuer or the valuation expert is something very, very different. It's something very, very different. So the valuer is bringing an expertise that the auditor doesn't have. So we need to check the competence of that valuer. We need to obtain an understanding of that valuer's work. And we need to even check the appropriateness of, whatever report he's bringing and all that. It's very, very important. Very, very important. Also, when you are using information produced by the entity, evaluate whether the information is sufficiently reliable. I think we've talked about this over and over again. Over and over again. Now, you need to know this. If audit evidence from one source is inconsistent with that obtained from another source, or the auditor has doubts over the reliability of evidence, there are two things that will go through the auditor's mind. The auditor will begin to look at the impact on other aspects of the audit, right? And will begin to think about what kind of procedures do they need to undertake to be able to investigate this a lot more. So when it comes to inconsistency of audit evidence, that's something the auditor always looks out for. Any questions on that? Oops.
Yeah, hello, sir.
Yes.
Please, I have a question on this point. Check the appropriateness of the expert's work. So my question is, if you are an auditor and because you don't have enough knowledge or sufficient knowledge in an area, that's why you went for an expert, then how are you able to check the appropriateness of his work? Since you yourself, you don't really know, like as you are not knowledgeable in that particular field. So how are you able to check whether or not his work is appropriate?
That's a very, very good question. Does anyone have a clue?
Say, can we see that if the expert is employed by the management, or yes, by the management, the auditor can get probably a third or a more neutral expert to go over. So here you can get probably more than one expert to review the work of the previous expert to know whether it's appropriate or not.
I see. Okay, that's a good point. And who has another thought? Who has another thought, please? That's a very, very good question. Does anyone have a clue? So she's asking if the auditor doesn't know what is going on with the expert's work, how can he evaluate? So let me throw back this question, right? How can someone evaluate that you are qualified to prepare accounts? Please, do you get my question?
So please come again.
How can someone evaluate your ability to prepare the accounts for them, or to prepare the accounts for them? Okay, let me just answer the question. So one of the reasons, if someone wants to check whether you can audit them or you can prepare the accounts for them, one of the things they'll check is your ICA, certificate. So your professional certification or your membership of an appropriate accounting body will give them, it gives them hardcore evidence. They're able to evaluate your competence. Once ICA Ghana has approved you, you know, and say, oh, you know, this person has taken our exam and has passed all levels of the exam and has even done continuing professional development, blah, 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 then such a person is able to perform things related to accounting, right? So that's the way people can assess you. So let's flip it back to the auditor and the expert. The auditor checks through, again, the professional qualifications, the licenses that the expert has, that gives them that credibility to do what they are supposed to do. That's a minimum form of evaluating the competence of someone. Then number two, usually, when it comes to things like valuations and other things like that, audit firms have different arms. You know, some audit firms are very, very big that they also have internal valuers. So if you go into the transactions advisory team of an audit company, so that's where I think Caleb was talking about maybe a third party, they'll have a valuer there, and the valuer can help in the assessment to see that, oh, this work is actually correct. You know, this what the valuer has done, it makes sense. So you can check the person's qualification, and you can also get another eye to help you in making that decision. Yeah. I hope I've answered the question.
Yes, sir. Thank you.
Okay. Now let's talk about the use of an expert by management. When assessing the objectivity of an expert employed by management, issues for the auditor to consider would include whether the expert has a financial interest in the audit client. We've talked about this severally, where we talked about self-interest, threats, and all that. If the expert is having a financial interest in the audit clients, it's something that the auditor must critically look into, because it might pose a problem, or it will pose a problem. Where your treasure is, your heart is also there. So the expert, whether the expert has a financial interest is something that the auditor must look at. So for example, if he has shares, you know, it's very, very important. Also, whether the expert has a personal relationship with a senior manager in the audit client. Number three, whether the fee paid for the expert services was a fair commercial price. You know, so we want to know that whether the fee that was paid was actually a fair commercial price, because we don't want a situation where the expert was bought to come and give an opinion, you know, because an expert lends credibility to, you know, a document, a video, whatever it is. It's possible for them to be bought. So we want to be sure whether these people were bought or they were actually paid, you know, a fair commercial price. Number four, the auditor should review the terms on which the expert was engaged by the audit client. The auditor should review the terms on which the expert was engaged by the audit client. So you look at the terms, which is self-explanatory. Okay, what terms were they engaged in? You know, what was the objective? What was the scope? what were the boundaries for the work, all these things should be in the terms of engagement with the expert. The auditor also may have to check the methods used by the expert. So how do you check? So for example, for the valuation of an investment property, right? So what the auditor is doing is checking the accounting side of the work that the valuer has done. So all of us know that IAS 40, if you remember your standards very well, IAS 40 is, I think, relates to either investment property or
investment property.
Yeah, investment property. Yeah, it relates to investment property. So for the example of the valuation of investment property, the method of valuation should be consistent, with the requirements of IAS 40. So the auditor will check that. The auditor has, check that. A lot of things that are done in this world has an accounting undertone to it. So there's the auditor that will lend that perspective. We'll see whether, the method that has been used by the experts is the standard given permission to that, that the standard agree with that. So all these considerations have to be made. All these considerations have to be made. Another thing is that if the expert has been asked to provide, let's say, a valuation report, the valuation must be close to the end of the financial year so that it is current, it is up to date. That's why usually inventory counts are usually done. That's one of the reasons done at the end of the year. I mean, the final inventory counts are done at the end of the year. So if the expert has been used to provide a valuation, the dates of the valuation should be close to the end of the financial year of the audit client so that it is up to date and current. So these are considerations that the auditor must look out for. Does the expert have a financial interest? Does the expert have a personal relationship? Personal relationship is talking about might lead to familiarity, right? The fee paid. Is there the fair commercial price, the terms of engagement with the experts, all these things are things that the auditor must certainly consider. Any questions on this? Okay, if there are